Hello everyone. I am Simi Anto, faculty, Department of Commerce, UG, Kristu Jayanti College, Autonomous, Bangalore. I'll be talking about the introduction to IFRS, how IFRS came into existence, why we need to converge with IFRS, what are the benefits of IFRS. IFRS stands for International Financial Reporting Standards. It was developed by the International Accounting Standards Board. It aims to create a common global language for the business affairs. Like human beings are having language to communicate, the language of business is accounting. So, the IFRS standards helps to have a common language which will be helpful for the whole world. It ensures the transparency, comparability, and consistency in financial reporting. Why IFRS is required in the world? Firstly, the globalization of business and investments. The world has become a global village, and anyone is free to do business anywhere in the world. So, the language of the business needs to be same, and that's why IFRS is required. IFRS enhances the comparability. When I am having business in multiple countries, I need to compare the financial statements of different countries. So, the same standards needs to be in existence everywhere. So, IFRS helps in comparability. IFRS helps in reducing the financial frauds and manipulation, which will be a great help to the investors. IFRS facilitates cross-border investments, especially in FDI and the foreign institutional investments. How the IFRS standards evolved? The predecessor of IFRS, mainly IASC, is the International Accounting Standards Committee. It was replaced by IASB in 2001, and IASB is the institution which is introduced IFRS. Now currently over 140 countries have adopted or permitted IFRS. IFRS 1 was introduced in 2003, 9 in 2014, 16 in 2019 and 17 in 2023. The key features of IFRS, it is basically the principle-based rather than rule-based. It focuses more on fair value accounting rather the historical accounting. It requires extensive disclosures and hence transparency is ensured. IFRS can be adopted by the countries in multiple ways. One is the full adoption, that is the countries directly will implement whatever is given by the IFRS Foundation. The second one is the convergence. The local GAAP of the country will be aligned with IFRS and new standards will be implemented. Third is the partial adoption. Some IFRS standards are followed and some others are not followed. There are countries which do not follow IFRS and they follow their own GAAP. So, India, we have opted to go for convergence. That means the local GAAP of India, which is AS, has been aligned with IFRS, which is international. And the new standards are formed, which is known as Ind AS. IFRS adoption in India happened in a phase-wise manner. The mandatory adoption started from 2016. IFRS adoption helps the countries and companies to have better access to global capital markets. It helps in improved transparency, thereby ensuring the confidence of investors, and it helps in cross-border mergers and acquisitions. The major differences between IFRS and Indian GAAP are in revenue recognition. As per the IFRS, we follow a 5-step model which recognizes the revenue when the control is actually transferred or the performance obligation is fulfilled. Whereas in Indian GAAP, the different rules exist for different industries. It happens when the risk and rewards are transferred. Fair value concept, assets and liabilities are measured at fair value. Here in Indian GAAP, it's mostly based on the historical cost. Consolidation is based on the control over an entity, whereas consolidation as per Indian GAAP is based on the legal ownership percentage. In IFRS, the depreciation uses component-based depreciation, whereas in Indian GAAP, it is used uniform rates prescribed by the law. In leases, IFRS requires to recognize right of use of asset, whereas in India, many leases are kept off the balance sheet. But there are some problems also in IFRS implementation, like high cost of transition, complexity in application, need for trained professionals. The standards are mostly complicated, so the knowledge that you require is more. And there is always resistance from the traditional accounting practices. In conclusion, IFRS is becoming the global standard for financial reporting in all the countries. India's Ind AS aligns with IFRS but retains some differences according to the regional balance. Adopting IFRS enhances transparency, comparability, credibility also. The future of financial reporting is moving towards greater standardization. Thank you for that much. The details of IFRS we'll be having in the coming classes. Thank you.